So, you want to know how to use credit cards in your favor and never pay interest? I have a few recommendations that have worked for me and have helped me save decent amounts of money every year. This video is about mastering credit cards. Hello everyone, my name is George. Well, in Spanish it is Jorge, but my friends always call me George, so you can call me George. Let's get into the recommendations on how to master credit cards. Recommendation number 1. Use the rewards as discounts. Credit cards usually offer rewards or points that can be transformed into discounts. Therefore, if you obtain a credit card that offers you discounts on things that you would end up buying anyway, that could be really smart. Otherwise, if you only are making purchases in order to get discounts on areas that you were not planning to spend, that could be a waste of money. To illustrate it, I would like to introduce you to Geraldine. Meet Geraldine. She has an average monthly spending of $1,000. She realizes that she can currently access 3 different credit cards. The first one offers rewards on flights. The second one offers rewards on sporting goods. And the third one offers rewards on electronics. She enjoys taking pictures and filming moments with her family, which makes her spend money on expensive electronics, trying to get the best out of her experiences. Therefore, the best option for her would be to choose the credit card that offers discounts on electronics. That way, the rewards would be actual discounts on purchases that she would have done anyway. The least smart option would be to acquire the credit card that offers flight discounts, because she normally travels to places that are close to her hometown. If she takes the credit card that offers traveling rewards, she would be spending in order to get rewards for a plan that is likely never going to happen, or which will make her spend on something that was not on her budget. It will direct her to losing control of her personal finances. She wants to be rich, and that is not what rich people do. If you want to know more about habits of rich people, click on the card that appears above. Recommendation number 2. Get credit cards with no annual payment. There are 2 options to avoid having an annual fee: good credit history and acquiring a credit card with no annual fee. Creating a good credit history will potentially get you to acquire credit cards offered with the first annual fee voided. I know it may be disappointing that this option will only help you save the first year of annual fee. However, there is actually a way that can lead you to never pay an annual fee, which is obtaining a credit card with no annual fee. Banks and credit card institutions have started over the last few years to offer credit cards that actually do not have annual payments associated. The way these credit cards operate is to set a monthly fee to be paid, which is voided if you make a minimum purchase amount every month, normally around $25, in either combined purchases or all-in-one purchase. You could be easily making this monthly expense of $25 if you use the credit card for your daily expenses. In fact, you should be using your credit card for your daily expenses. You want to know why? I will explain it in the next recommendation. Recommendation number 3. Use your credit card as cash. For mastering credit cards, you should use your credit card for your normal purchases, because as we saw on recommendation number 1, it will give you rewards or points that can be transformed into actual discounts. Getting back to Geraldine's example, she has a monthly expense of $1,000 for her living and leisure expenses. Therefore, she would be using her credit card to spend those $1,000 instead of using cash or her debit card. That way, she will be having the same amount of spending that she is used to, and it allows her to easily pay the money borrowed from the credit card. Why using the credit card instead of debit or cash? Because as we saw on recommendation number 1, the credit card that she opted to gives her rewards in electronics. Therefore, she spends the same monthly amount of money, but this time she will receive discounts on electronics. And remember that electronics were a usual purchase made by her. So, next time she purchases electronics, she will be able to redeem those rewards in the form of a discount. That is why the best option was to get that credit card. Since she has to pay the borrowed money back, she needs to ensure that she pays it on time, which is in fact the next recommendation. Recommendation number 4. Always pay on time. Getting back to Geraldine's example, she's obtaining rewards that can be converted into discounts and she's not paying any yearly fee. In order to her to keep being out of charges for using a credit card, she has to ensure to always pay on time. Since Geraldine has a full-time job and has 2 kids at home, she knows that she can forget to make the credit card payment on time. She does not want that, as she would end up paying interests, and she's definitely not looking for it. So, she takes the option of setting an automatic recurring payment, which is basically setting up an automatic payment to the credit card every month when it needs to be paid. The charge will be made to her debit card. Most of the credit cards offer this option and it is such a great tool. However, Geraldine realizes that every card statement offers 2 options, which are to pay the minimum amount or the full amount. Geraldine ensures that the amount that is automatically charged to her debit card is the full amount. Otherwise, she would end up paying interest anyway. Do you want to know how bad paying the minimum amount could be? Check out the next recommendation then. Recommendation number 5. Always pay in full. Geraldine knows that paying the minimum amount will take her more than 10 years to fully finish paying the full amount. She wants to get rewards from the credit card, not to have a debt for life. You do not believe me that it will take her a long time to pay her debts if she only pays the minimum amount? Let me show you her calculations. She made the exercise with $100. Let's assume that her credit card institution charges 24% annually on interest, which is what some institutions charge. It makes it 2% of interest monthly. This interest is charged on the money borrowed if not paid on time or if the minimum amount is paid. And some institutions can request Geraldine to pay only 1% of the amount borrowed as the minimum payment. If she only pays that 1% that comes in the monthly statement, which is $2, she will get charged 2% of interest on the $98 balance left. The interest will be then $1. This calculation can go on and so forth, and the debt will take several years to disappear. Therefore, the recommendation is to never pay the minimum unless extremely necessary. This should never happen anyway, should you always use your credit card as cash, as mentioned in recommendation number 3. Recommendation number 6. Make advance payments. Geraldine's current credit card has a credit limit of $1,500. However, she's looking into buying a device that costs $2,000. She has been saving the money for it, so she could pay for the device with her debit card as her credit card does not lend her that amount. She was thinking of acquiring another credit card with a higher credit limit so she gets the rewards from using the credit card. However, the rewards will not be good enough to even help her to pay the annual fee. Therefore, she discovered that she can transfer the $2,000 from her savings account to the credit card. That way, the limit will temporarily increase to $3,500, and she will be able to easily pay the device with the credit card, which will allow her to receive all the reward benefits from the credit card. Geraldine is smart. Be like Geraldine. Recommendation number 7. Borrow money interest-free. Another way to make a positive use of credit cards is when you see that there is a good purchase you can make. For instance, Geraldine has been recently looking for a new TV screen that has a usual price of $2,500. Right now, it has a price of $1,000. She knows that she will receive a bonus from her work next week. However, the deal ends this weekend. Therefore, she will use her credit card to buy it right now, and she will pay the credit card balance when she receives the subject bonus. This is a great advantage of credit cards. They give you a grace period in order to pay back the money borrowed. As long as you make the payment back within the grace period, you pay no interest at all. If you want me to make a video explaining more about the grace period and other basic stuff about credit cards, please let me know in the comments below. You may wonder how that is possible. How credit card institutions allow you to have only benefits from credit cards if they are in the business of making money. The answer is very simple and very useful for mastering credit cards. And it's because they know that only a few percentage of people will follow all the recommendations that I have mentioned in this video. And from that small percentage, only a small percentage will keep doing it for a long term. At this point, you may be still wondering, how do credit card institutions make money anyway? Do they only live from annual payments? Is that really profitable? I had these questions for many years. Now that I have the answers, I will share them with you. Their main income sources are as follows. Annual payments. This is definitely one of their income sources, but not the only one. Commissions from your purchases. Whenever you make a purchase in a store, the credit card institution charges that store a percentage of the amount that you paid as a client. American Express is the institution that charges one of the highest percentages of commissions, and that is why it is not accepted everywhere, because establishments pay a high percentage to American Express for every product or service they sell. Interests. Credit cards often give you the advantage of lending you money for buying an expensive product that you cannot afford right now. And instead of paying for it in full at once, you have the opportunity to get the product now and pay a monthly fee for a given period. 24 months, for example. What happens there is that you are paying interests. For instance, if you buy a product that costs $1,000, you will end up paying $1,400 over a 24-month period if the interest rate is 20% annually, for example. As giving you the opportunity to have a product that you cannot afford right now, and having the opportunity to charge interest on the money lent, some institutions have their own credit cards so they can sell you a product. It increases the revenue, plus they charge you interest on the money that is lent to you. They are smart. It is a double sale for them. Did you find this information interesting? Then click on the subscribe button right now. Which recommendation did you find the most interesting? Number 2 or number 3? Let me know in the comment section.